Hello traders, today is the 20th of April, my name is Evan Hornsey, market analyst YouTrading, and today I'll be looking at chart patterns, price and time and how to trade them. So for those that follow along, you basically see me talk about breakout, retest and continuation patterns. And in certain ways, it's quite easy to spot if you basically just look at the previous day's highs, previous day's lows. Or you may want to choose another range, maybe an intraday range, which is essentially based around a certain period of time. So it could be the London Open, the first couple of hours of that, or maybe the US session. If you trade the first hour, that's called the initial balance. And I essentially like to use that initial balance as my range before I wait to see if price is going to continue going higher or if it's going to reverse. Defining a range is, more of a personal sort of thing. You can decide whether you want to be a higher time frame trader and trade maybe say a previous day's high and low as a range. So the previous day's high and low on the pound USD yesterday, you can see here came at 1.304 for the high, 1.298 for the low. And then in the Asia Pac session, we had a push out and a close above the previous day's high. So the bulls are sort of showing that their intention is to take it higher. Now, the pattern that we're looking for goes along these sort of lines where we have some trading going on, and we have a significant high, a significant low. In this case, it's the previous day's high and low. Then we have a breakout to the upside in this scenario. Obviously, it could be to the downside first, but the bulls are in control. So we're looking for a breakout to the upside. Now, the next part is how high is the breakout. So if we get a decent breakout with momentum, we then look for a classic retest before a continuation higher, and that is generally the pattern that we look for. So the breakout, the retest, and continuation higher. Obviously, in this scenario, we actually had a deep retracement back into the previous day's range before we had this continuation move to the upside. So the pattern looks something like this, where we go form a range from the high to the low, breakout, either retest like that and go, or form a range, breakout, come back in quite deep retracement and then go. Now, if it's the first one where we just have a breakout, retest, continuation, you don't want to see price really, once it's traveled back above this swing high here, you don't really want to sort of see this swing low get taken out. So your profit and stop loss can be based on that. So you can get in when you see the rejection, put your stop loss quite tight, and then a decent risk reward ratio of at least 1 to 2 to the upside. So that's that one. With the second one, where we have a deep retracement, you're looking for a breakout. Sometimes it's not very big of a breakout, not a lot of momentum like we had here. It was just a daily, a candle close above, which signified, the intention. Then we had a deep retracement here. So in that case, you put your stop loss underneath the sort of significant low of the range, and then you're looking for, again, a risk reward target of at least 1 to 2, target the previous significant swing high in this case, or higher. So then you get asymmetrical trade. Your stop loss is now below the bottom of the range, and if it was to be invalidated, that also gives us some information. And by that I mean, here we had the range, we had a breakout, then we had a deep retracement. Now, if this was to have carried on, if we didn't get this rejection sort of bar, if we'd looked to the left, we had this big down bar. If we had gone underneath that in this move, if we'd gone below here, that would have signified that the bulls were no longer in control and that the bears were sort of going to have a go. And then we're essentially just looking for sort of the opposite of what I've just described to the upside. We're looking for either a breakout, retest, continuation to the downside, or we're looking for a move back into the range, deep retracement, and then continuation. So if you get stopped out, then hopefully you get stopped out quite quickly, because you're not seeing the sort of rejection that you want to see. And if you get stopped out, that also gives you more information and a possible chance to flip like these traders probably would be. All right, so just going back to this particular chart. So we had yesterday's high, which was that bar. And we had yesterday's low, which was that bar. So significant high, significant low, breakout to the upside, deep retracement. Now, deep retracement for me is anything below value. So value is 50% on the fib tool. So if I put a line there, so we're looking for a reason to get long below the 1.301 this morning. And this is where time comes into play. So for me, the idea is to trade when lots of other traders are going to get involved. And that is normally around the start of a trading session. So go to the 5-minute candle. You can see here we did have quite a lot of movement in the Asia Pac session, especially after the Bank of Japan announced that they were going to basically peg their yields to 0.25%. So the dollar was moving around, the yen was moving around, and obviously their major currencies and their crosses get affected too. So here we had significant low from yesterday, significant high, but we had a breakout. So now we use this new breakout high as our significant high where we anchor the fib. And then the deep retracement is this pullback here. So anything below the 50% is value. So anything in this sort of chart area is where we want to look for a buy. The next thing we want to look for is the start of a trading session. So 8 o'clock in the morning, my time is the start of the London. So anything to the right of this line is good. Now traders generally go on break around 11. So if you want to trade a pattern, you kind of want to do it within the first hour, the first 2 hours before they start squaring up their trade. So if we say between 8 and 10, though it could be pushed out to 11 o'clock, but here we can see we actually saw price come in to where we're looking value within the first hour or two. So if I just take it out to the 10 o'clock, there we go. So assuming that you saw the 78.6 as a decent level, once you started making new highs on these candles, then you could start to, just anticipate this move. So that's where you put your entry in, maybe on the break to the upside. Then you put your stop loss underneath the significant swing low, knowing that if you were to get stopped out, then that's due information, and that any buyers here are now flipping to being sellers, or they're being stopped out, and there's an acceleration going to happen to the downside. So you're looking for a risk reward ratio of 1 to 2. So if we just take it up to 2, here you can see that if we had taken a sort of long position anywhere between the 50% and the 78.6, once we started seeing, bullish bars come in, then it's quite easy to get a risk reward of 1 to 2. So that's what you could have done today. So that's one element of price and time. Now, if we go to the dollar CAD, I'll just clear all this off, start again. So if we go to a daily chart, now we can see that the price action has been pretty messy recently. It's just been sort of sideways. Yesterday, high was up here. Yesterday's low was here. And obviously you can see that today's price action has come to the sort of lower end of that. There is a high over here. So this hasn't been tested. So this is like an imbalance. We had a range, a dip down, then a big impulsive move to the upside. So this is the imbalance. This is where all the volume would have came in. So if we go down to a 30-minute intraday chart, we can see here, this is the high and low. And if we look to the left, we had relatively equal highs here, all the way across here, price action. And then this morning, we came back below yesterday's low. So Obviously, if we'd had a close above these relatively equal highs yesterday, that would have signified that we were going to move out of this trading range. However, what they did was they just grabbed the liquidity above all these swing highs here where the stops would have been. And now we're sort of seeing that they've used that volatility that occurred here. So we had like a big push up, lots of buy stops got triggered, which meant anyone that was looking to sell could sell into that. That's what we saw here. Big push down, come back up, retrace. Couldn't get any more buyers to take it above, so they've just ground it all the way down lower. So come to this morning, which is what happened around here. Again, if we put our London session start, so that's 8 o'clock. See here, well, big volume indicator rising there. So lots of volume came in at 8 o'clock. Then we had a push down and we've broken out. Now we haven't had that breakout retest continuation to the downside. However, if you're sat at your computer at 8 o'clock and you go down to a smaller time frame, you can tighten up your stops if you like by noticing here. So 8 o'clock comes, we don't see a bullish reversal. We see a further move down at 8 o'clock. Then we have a retracement. And then we have a breakout of yesterday's low. And then that's where we get our tiny little breakout retest continuation to the downside. So if you'd been here between 8 a.m. and 10 a.m., like I said, you would have just about caught that little breakout retest continuation to the downside. Now, obviously, if you're going to get in on a 5-minute chart, you want your stop relatively close. So as soon as it broke this swing low here, you want your stop here. Maybe you'd put it up there, but if you put your stop here, then that's mitigating risk. You don't want to see price come back in really. You just want to see it go. So your risk to reward ratio would have been a lot smaller. You maybe have taken a trade when it sort of crossed below that previous swing low here on the 5-minute chart, really tight stop, and then an asymmetrical trade of greater than 1 to 2 is what you're in now, if that's the trade that you took. So that would have been good. But again, price and time. So price, we were looking to see what happens at the low or high of the previous day. Now we're looking at this particular time. We just happen to be at the lows between 8 and 10 a.m. So we're looking for a continuation to the downside. Now, in the euro versus US dollar, we've had some sort of wild moves, really. Now, the chaos is obviously due to inflation, CPI, ECB. It's to do with Ukraine, all those sort of things. And here we can see that we've got an imbalance here. So we had a little range and then a big push to the downside. So we're seeing the bears are currently in control. We haven't taken out that low yet. So we're kind of just going sideways and retracing that big move. So the target is essentially where this breakout occurred, 1.09. So anyone that's doing a counter trend is looking to try and get as close to 1.9012 as possible. If you go to the 30-minute chart, we can see that yesterday's range was, if I just use different colors so we can define it. So this was yesterday's low. So I'm going to put that as a red. This was yesterday's high. So I'm going to put that as a green. If we go to 5-minute chart and we define where London session started. So moving across, 8 o'clock starts there. And then we're looking for something to happen between 8 and 10. Okay, so if you start looking at the euro versus US dollar at 8 o'clock, you see that we're at the highs. We can see that during the Asia Pac session, we've taken out the previous day's high. So the bulls are looking to be in control. Now we have a bit of a pattern that I look for. Like I said, I look for some sort of range to occur. So we had a pullback, then we had a high, then a significant low form on the obviously 5-minute chart, but it is significant if this is the time frame we're looking at. And then we had a breakout to the upside. So that pattern again, where we have a range, if I just define the range again, so this range is sort of saying, that we're anticipating the bulls to take this up higher. And then it's whether or not there's enough room for them to come down, retest, continue, or whether they're going to come back into the range deeper before going higher. Now, what we saw here was this, if I make that a different color, maybe blue. So we had 8 o'clock happened, we're around the previous day's high. We had a low, then a high, a lower low, and then a higher high. So this range here, which I'm defining with the blue horizontals, they took out the low, they took out the high. We're obviously expecting these highs that we have been taken to continue to the upside. Now, the breakout to the upside wasn't that significant, so it wasn't going to give us the sort of breakout, retest, continuation. We thought we are going to get a bit more of a deep retracement back into the range, maybe come back down to the 1.081. That didn't happen. Instead, we had an inside bar, and then we just take an inside breakout. So that's another way you can look at these. This is the price action. We're looking for reasons to go long. If you see here, we've got a low and then another high. This is a range, inside bar, breakout to the upside of that inside bar, and then a break of the mother bar on the 9:30 candle, which then takes us all the way up. So we were anticipating going higher. We started to anticipate a retracement. We didn't get it. We got a consolidation instead, and then we got a breakout. So if you take out a long trade based on that breakout, you put your stop loss underneath the swing low that you've been considering within your smaller range. Then you're looking for a risk reward of 1 to 2 again. And you can see that you made that. And if you had carried on going up to another significant level, then your asymmetrical trade turns into a risk reward ratio of 1 to 3. Now, why did price turn here? If you go to a higher time frame again, we're sort of working within this larger range here. So the high here to that low. And if you take a fib down to there, and then I think it's the 0.6. So yeah, the 0.618% retracement of this range is where they kind of stalled out this morning. So anybody that was looking to get short at here, they're the guys that pushed on the 5-minute chart to get that price up into the 1.0859. So that's the kind of things you can look at, but it's all about knowing where you are in terms of a significant range. For me, the daily range is obviously the most significant, and whether or not you're looking for a bullish continuation or maybe a retracement before that bullish retracement turns into a continuation. Okay, I hope that makes sense. Obviously, if you've got any questions, leave them in the comments below and I'll answer them in a subsequent video. All right, take care. I'll speak to you tomorrow.